it's almost inevitable that trends will break. Certainly open to that happening. I've been tracking it for 7 years. Right now, we are right on trend. 3x 125K, 375K. A power curve, it's increasing faster at the beginning, but it slows down. It's not as bombastic as exponential, but it's still incredibly fast. You would still hit at least the projected value of fiat, gold, and silver altogether by 2043. The beautiful thing about power growth, it's sustainable. So exponential curves, just like central bank balance sheets, the stock market, they're just not sustainable over a true long period of time. You can't have Bitcoin growing in power as well as TradFi growing exponentially. And how do you compound fiat interest on top of limited Satoshis?
We've seen a great leapfrog directly to the White House. That flips everything on its head. And suddenly we're going to speed run this thing, and that upends everything to do with the power law.
Archie.
We were just having a great conversation outside, and I thought, Matthew, why don't we just come inside here, do a quick chat on the podcast and share it with everybody else. So Matthew Mežinskis, thank you for coming on board. And why don't you tell people a little bit about who you are and what you do?
Yeah, Archie, nice meeting you. Thanks for having me on. And it's great, like I said before, it's great to have you all in Riga for the Honey Badger. I've actually been helping these guys out with that since about 2017, the oldest OG Bitcoin conference, as they like to say here. But yeah, I'm American Latvian, so I've actually been based over here in Latvia for almost 20 years. And it's a little bit different, it's the wild, wild East. Former Soviet country, although the Baltics for sure always like to call themselves like never Soviet people, illegal occupation after World War II. But in any event, a lot of changes in the last 30, 40 years since communism has basically been on the out. But we were just talking at the beginning, socialists love to plan centrally and think they can do things better than before. But I've always said, on my own podcast, my own show, like the Baltics or the Soviet Union in general is the best. It's the best. It's basically the best. What's the word I'm looking for? It's the best example of how Soviet societies can basically make the following generation poorer, which typically doesn't happen. It does sometimes around the world, but I just remember this story. Like my relatives, my father escaped after World War II, and a few of his relatives. But the people that had to stay in Latvia, they grew up poorer than their parents that were growing up in like the 20s and the 30s.
Who were literal, and then the subsequent refugees, really. Like I was telling you before, my best friend in high school his grandparents were one of those people who had to leave Latvia as refugees, and they settled in Australia as well. So it's like those people left with nothing and lived better than the people who stayed behind with all that they had.
Yeah, it's one of the best examples, I think, is just to see the Eastern Bloc, Iron Curtain, all the rest, just see how terrible their growth was compared to the West. But they're going gangbusters now, and it's really great. And, every year this conference gets better. So anyway, it's a little tangent about myself. But in the Bitcoin space, I've been around since about 2017. I'm probably the last Bitcoiner to have a show with crypto in the name. My show is called Crypto Voices. Started in 2017, which was interesting because it's always been about Bitcoin. But I don't know. The word crypto kind of became a little bit bad for Bitcoin.
It became corrupted, really.
Yeah. And I don't know, just too lazy to change it or whatever. But it's funny because I still think crypto eventually will come back to Bitcoin. The term crypto, it's basically all like we had financial engineering in the financial markets. We're going to have whatever it might be with what's happening with Nostr or whatever. Obviously, it's a Bitcoin-centric platform. There's going to be plenty of crypto coming back to Bitcoin. So I haven't changed the name.
Looking for a secure, trusted way to buy, sell, and hold Bitcoin? Gemini has been leading the way since 2014. Founded by the Winklevoss twins to be a security-first, fully regulated Bitcoin platform. With Gemini, your Bitcoin is protected with enterprise-grade security, backed by insurance and Type 2 certifications for SOC 1 and SOC 2. Whether you're new to Bitcoin or a long-time hodler, Gemini gives you the tools to stack sats and build generational wealth your way. From simple one-tap buys to advanced charts and trading features, it's all here. Buy, sell, and hold securely. That's Gemini. Gemini, Bitcoin with confidence. Need cash without selling your Bitcoin? With DeBiFi, you borrow against your Bitcoin, non-custodial, multi-sig escrow, and you keep your keys. No banks, no selling, just institutional grade liquidity with terms up to 2 years and APRs as low as 9%. All transactions are signed using private keys on your own device. Using a 3 of 4 multi-sig setup, 3 out of 4 keys must approve every transaction, giving you control, transparency, and peace of mind. Whether you're a hodler, miner, small business, or treasury team, DeBiFi gives you the cash you need now without giving up your Bitcoin upside or triggering a taxable event. Get liquidity, keep exposure, and stay secure. That's DeBiFi. DeBiFi, your Bitcoin, your money.
But yeah, I have that podcast. Also, you can find me at One Base Money on Twitter.
Can you spell that for people?
Yeah, at the number One Base Money. One Base Money, the number One Base Money. And then I guess a couple other things just from my research that I've done that are somewhat unique is since 2018, I've been charting the growth of central bank money, which in my opinion is the most analogous money supply to Bitcoin. Okay, so that's what it's called, the monetary base. It's basically the size of the central bank's balance sheet, which is about 26 trillion today globally. Top central banks in the world, top 50 currencies. So I've been charting that. I do quarterly release every quarter. June will be out very soon, June 2025. And then I also track, since late 2018, I've also been working, as a few others in the space have as well. Giovanni is one of them. Been following Bitcoin on this curve, this power curve, which is something, I've been tracking it even longer than things like the stock to flow. But those had a lot of marketing hype compared to the power curve. It's just kind of been continuing on. So it's something interesting. I gave a presentation on it today, and I'm tracking it. I'm not married to it at all. We were talking before the show, like it's almost inevitable that trends will break, and I am certainly open to that happening. But for now, I've been tracking it for 7 years. It's been Bitcoin. And when I say the power curve, like what are you tracking? The price first and foremost. But I view it as adoption of Bitcoin. So Bitcoin has been on this nice, gradual, basically it's a declining growth rate. It's not an exponential curve, but it seems that if you look at the price, at least since 2016, it's been on this pretty stable 96% R squared trend. And when I say trend, I don't mean like trading view lines on charts. I mean a mathematical trend, a regression. And it's pretty incredible. I mean, the curve itself at the moment right now is about 109K, and we're about 115K. So it's not always right around the trend, but we're coming from a bear, the last couple of years, and we're coming out of it, and we're passing this curve. So it's an interesting thing, and I kind of view it as adoption of Bitcoin. So anyway, there's a lot thrown in there. We can talk about whatever you want, but those are kind of the topics that interest me in Bitcoin. So I stream about that stuff as well. Like,
do you make a distinction between a model and an indicator?
Not really. I think I know what you mean, but I don't even want to answer the question. I'd rather hear your opinion. I don't really. I'm not like to give you my opinion generally. Certainly, people, look at candles and wicks and all this Fibonacci stuff in Bitcoin. Obviously, it's a super liquid market. It's very interesting. I think you can probably make money doing that, but that stuff's doesn't interest me. I'm more interested in kind of what Bitcoin does. And so it's not really an indicator. It's more of a model of that. And it's a very simple model at the end of the day. It's a simple mathematical formula, but just to make it clear what we're talking about. So, if you think about any asset, gold, silver, stocks, bonds, any market, if you even things like GDP, if you plot it out on a long enough timeline and you put it in log scale, log linear, so log on the left-hand axis, it will always form a straight line, basically. So go out far enough, whatever, it could look like it's going crazy, exponentially crazy, but then you put it on log scale, it turns into a straight line. That's exponential growth, geometric growth. That is pretty much every financial TradFi asset in the world. Bitcoin, so far, has a better trend line fit on something called a power regression, which a power curve will become a straight line on log. So it's actually, if you put the y-axis on log and the x-axis, which in this case is days.
So price and time.
Yeah, time. And time is not dates. It's important to understand.
Can we just quickly define what log is? It's
Yep. So
each
log
increment is an exponential.
Exactly. Yeah, it's an order of magnitude higher. So
that's a 10x. So each mark on a chart, each increment is 10x the previous increment.
And it doesn't matter actually the base. You could be base 10, base 100, base 8. It doesn't actually matter.
Oh, okay.
Yeah. Usually the charting software will pick what's ever kind of most accurate for the asset or the price or whatever. But yeah, it's the idea is that once you go log on the y-axis, which is just a mathematical type of a representation, the trend line forms a straight line. And that's like kind of an immediate thing. I say that all the time just for people to sort of, it's just a nice, easy way to understand how things grow. And if you look at anything in the financial world, gold price, this is why I gave my presentation on today, like gold price over 200 years, or silver price, stock market, it will always turn, the trend and even the active price will basically look like a straight line on log scale. A power curve will, in Bitcoin's case, it looks like this sort of a gently asymptotic, sort of a concave down. It's sort of like, it's just sort of, it's increasing faster at the beginning, but then tapers off. And I'm talking about price. A few other things that grow like that in nature. So I quoted this book, Scale by Geoffrey West in my presentation. And it's one of the books that a lot of people that are working on the power curve in Bitcoin, like Giovanni and Plan C and Sina, these are some names that people that might follow that research know. You just talk about, okay, so what is a power curve? Why is it growing like this? The idea is basically exponential is a constant, okay? And we just compound interest constantly, okay? So, gold might be returning 7% per year, right? Over a long time frame. Stocks will be returning 12% per year over a long time frame, like 20 years. And that just has to continue. So a lot of people talk about, all the debt in the system, all the interest, whatever. That can actually, they're not even speaking about monopolies, inflation, economics, just as far as how systems grow, they always grow exponentially. And as Geoffrey West in this book talks about, he even coins a term called super exponential, where if you look back in the day, in the day, I mean, just like a couple hundred years ago, obviously we had less inventions, slower growth. The story is just slow compound growth. And so I was trying to represent this in I know we're talking around charts that I gave, but my presentation is available for people that want to watch it on YouTube. But, back in the day, the gold price obviously was even fixed. So it's a whole different system, but it was getting devalued in the 1930s, eventually in 1971, but you could still do little trend lines, and gold was obviously just slowly getting devalued, a slow trend, a couple percent a year. From 1970 until 2008, it grew faster. So it grew like 2-3% a year. And then from 2008 until today, it's growing like 4.5% on a trend. Okay, so basically what happens is the growth rate has to get bigger every period, and the doubling time gets smaller. It actually doubles quicker. So Geoffrey West in his book Scale, he calls this super exponential growth. And theoretically, he merges this with the idea of the singularity. He's not talking about like Ray Kurzweil or stuff. He's just talking about a mathematical singularity. But theoretically, if we have to he uses the example of a treadmill. You have to, we're on a treadmill, it's going this pace, but with the growth of technology, invention, just the pace of our lives, it moves faster than we sort of realize. And to keep up with it, we have to jump to a faster treadmill. And he doesn't even really bring in, inflation, politics, whatever. It's just pure math. And I think it's a really interesting idea. I think it's borne out by the facts. And so what you see over economic growth of the 1800s or 1900s, it's growing here. And then, the 1950s is growing here. Yes, inflation is a part of the story, but you can just chart out those trends. And so the singularity in this view would be when you go completely vertical. Then that's obviously can't happen. So his book is exploring sort of what happens there. But one of the ideas or the systems that can handle this sort of a thing is what we call power growth. And so power growth actually starts out fast, but then it slows down. And there are examples in the world that we can look at. So two of the prominent ones is like organisms. It's way like metabolism and the way we grow when we get bigger. It's like a proportional growth. It's one of the reasons why like Godzilla could never exist, because it would just collapse on itself. It can't grow that big like an organism like that. Another example is cities itself, the growth of cities. And this is, I think, the best example for Bitcoin. So when he wrote his book, by the way, he wrote this in 2017. Bitcoin was not mentioned. He wasn't thinking about Bitcoin, but he's talking about this ideas of mathematically jumping from one treadmill to the next, moving faster and faster and faster. How do we do it? Are we going to get out of it with an invention? Is it going to be, he talks about maybe it's just flying cars. Maybe it's, Internet of Things, digital devices. He talked about all these little things. He does not mention Bitcoin. But the best example of how this power growth has worked in the past is with cities. So unlike economies or nation states, which all grow exponentially, like I said, GDP, you put it on log scale, straight line, 2% per year, that means straight line on log scale. Whatever it is, 2, 3%, it can move, but and usually it has to go a little bit higher. Cities do the opposite. They start faster and they grow slower. So it's a very interesting concept. It's like, it's why we don't build, there are some, banger cities like really booming, but our skyscrapers aren't like going into the sun like the utopian novels or something. You have less people that need a car, less people, you might have smaller families or whatever. If people want to have a bigger house family, they move out of the city. Cities are actually very self-sustainable.
There's a physical friction to the rate of growth for a physical city, whether that's infrastructure, technological advances that allow us to build in certain ways, for example, height.
Technology is part of it.
So, yeah.
But just to close it up, and I'll stop talking here, but the idea of city growth, I think, is actually a great corollary with Bitcoin. So what he says is, and I actually know if he says this exactly, but it's my observation is, if you look at nation states throughout the centuries or major, economies, they have all fallen. We talk about this all the time. This obviously sells a lot of newsletters. The end is near. I think a lot of it is apocalyptic. I'm not a doom and gloomer in that sense, and I'm optimistic about Bitcoin. I'm optimistic for the world, but I think it is true to make this statement. Something like nation states or economies as a whole, if they're growing exponentially, at some point it's going to break. Either you got to reset or someone else takes over or whatever. I don't know, but they're not sustainable. Economies, nation states, they're actually not sustainable over the long, long term. But cities are eternal. City of London, Paris, even, Constantinople, Istanbul. Of course, it could have many iterations, but it's still there. So
the city will stand, but how you draw the lines around it may vary, as in which country it might belong to. But how do you relate that to Bitcoin? And I guess one of the things that comes to my mind is the digital nature of it. So in a physical sense, we have some very obvious physical limitations that assert friction on the rate of growth as it reaches scale. But what are those limitations that apply to Bitcoin, or do they apply at all, given the fact that it's a digital domain? Well,
I think there are scaling limitations in any system. I think that is going to be the case. Even Bitcoin scales much better than something like gold because it is in the digital domain.
Can I rephrase that then? Sure. What are the limitations between where Bitcoin is now and where it gets to a saturated level of adoption?
Yeah.
That says that can't happen faster than whatever power model might project.
Right.
Because I can't identify any. It could happen faster than any model projects because it's all done digitally, and I can't identify anything that is friction beyond the rate of cultural acceptance of Bitcoin.
Yeah. And it could, by the way, and again, just to sort of address, I think, some of the underlying sort of principles of your question, or indeed, maybe even there's some bias for a lot of people. Exponential is a very common word in Bitcoin, right? So things just growing. Even if the person that's talking about exponential doesn't really know the underlying, the doubling time or how it actually works, it's just a word that we use a lot, even with Bitcoin. I would phrase it differently in that Bitcoin, the beautiful thing about power growth, which again is the way that cities grow, right? It grows faster at the beginning and then sort of scales. It sort of levels off. It's sustainable. That's the key word. It's sustainable. All right. So exponential curves, just like, central bank balance sheets or the stock market, we can draw straight lines on log scale and they can continue on and look pretty good for a while, but there either is a breakdown eventually in the system, or it just has to go, like Jeffrey West talks about, faster and faster. We have never, I think, really fully seen this sort of mathematical singularity. But in my mind, I look at it completely different. I look at those systems as things that something needs to be corrected, right? And I think this is, again, it's a totally bullish thought, right? This is why Bitcoin is such a wonderful asset. This is why Bitcoin offers us an escape hatch from the way, the rat race that it always had to be done. When people talk about, many people have made this observation, but it's just interest compounds upon more interest and more interest. The only way that you can pay for that is with more fiat. There is no other way. And indeed, it's a true statement to say that if there was not more compounding interests, the system would collapse. It would collapse on itself. So it all fits together in my mind. It's just, I view this power growth, which is more sustainable, as an escape hatch in itself. And then I guess one more, there's a hard number that I can put on this, at least my observation with Bitcoin is, again, as we're talking about in time, so it becomes a straight line on log, a power curve. It doesn't matter the base. It doesn't matter, how the log scale is set up. It could be whatever asset. But if something has a power relationship, like the growth of Bitcoin, like the growth of cities, you'll see a straight line on log scale. And then from there, you can calculate doubling time. But doubling time won't work the way that an exponential works. So an exponential, the basic thing is a rule of 72, just the basic math. So you take, if you hear something compounds at 10% per year, drop the percent sign. How many times is that going to 72? 7.2 years. That's the time to double. And that's a fixed number until the system has to grow a little bit faster to compound all that interest. So this is why, in stock markets and returns with your family wealth manager or whatever, family offices, you're talking about, what are you getting? Are you clearing 15% per year, 16, whatever? That we're all speaking in the language of exponentials. Bitcoin, the technical definition of the power curve as I've seen it, it grows proportionally with itself, meaning that for every 12.7% increase in the life of Bitcoin, the curve doubles. The value of the price in this case doubles. That is as I've found it. You have to do the calculations, but basically it's 12.7.
Is that an average, or is that actually
it's the
held
slope
constant?
of the curve?
That's okay.
But that will change. Unlike an exponential, that's not a fixed 12.7% per year. It's during the life of the system. So at the beginning, we start from the Genesis block. So at the beginning, back in 2009, 2010, 12% could be 50 days or whatever. Just pick your starting day. Now we've been through 6,000 days of Bitcoin. So 12% is getting about 700 days. That is where we're at right now. And it works itself out to about 41% per year at the moment is the current compounding. You can still figure out a compounding, but it doesn't stay the same. So it's 41% per year, roughly, or 42% per year, roughly doubles every 2 years. That's where we are right now today in 2025. Back in 2010, we would double every 8 months. Now we double every 2 years. And lest if you're listening to this and you're biased against this idea because you're thinking this is worse than compound growth because it slows, might go back to your question as well. It's still so fast compared to the other system. And I think it's better because it's sustainable. So we're at a doubling rate of every 2 years right now, but that doubling rate will slow to about 3.3 years by the year 2050. So it's a long way away. Another way to say that is that we will hit 10% per year out in like 2070. So we're right now at 42%. That is the slope of the curve right now. 42% a year. We will get to 10% by the year 2070. So it's an extremely scalable model. And I think it fits Bitcoin very, very well. I think it's a great Bitcoin narrative.
We're talking about Bitcoin's growth as a function of its price right now. And that is a function of capital allocation to Bitcoin. And I guess there was an assumption, at least in a lot of the analysis and commentary that I've seen in the 5 years that I've been in the space, is that it would be from the adoption rate would be from the small scale to the large scale. Yeah, it was initially the ideologues and, the miscreants using Silk Road and all, and people who were just curious, and then early adopters. Yep. And then once that was kind of the initial phase, and then we would embark on a long mainstream adoption of Bitcoin. And that mainstream adoption would have two tracks. It would have the institutional and sovereign track, as well as the retail track as well. And the assumption was that the plebs will come first before the old money would. Now, what I'm observing is that that's kind of being subverted, or inverted, I should say, because we're seeing a lot of moneyed interests come to Bitcoin before the majority of the mainstream. So I consider myself, having bought in late 2020, to be the early majority. And now what I'm seeing is actually, and around about that same time, a lot of very smart, nimble hedge funds were getting into it through, like Paul Tudor Jones and Druckenmiller and the like. And now what we're seeing,
strategy as well.
Strategy as well so that's the corporate and we'll get into the sovereign as well. So it's more like the institutional and professional investment class.
Yeah.
But what we've seen is that on the sovereign track, we thought it would be the smaller nations first. And that was indeed playing out that way for a time.
Yep.
But we've seen a great leapfrog directly to the White House through some amazing lobbying work through, various PACs and organizations that are set up. And I wonder whether that flips everything on its head. And suddenly, rather than having to wait 10, 15, 20 years for the green light for all of institutions, all of the corporate world, all of the sovereigns, to start allocating funds to Bitcoin, and whether or not we've inverted that scale now, and suddenly we're going to speed run this thing to a parabolic S-curve, and that upends everything to do with the power law. So the power law assumes that mathematically what has happened previously will continue to be the rate of adoption.
Right.
And I understand that various people have modeled not just the price in that regard, but also the hash rate and other
address growth.
Exactly. Elements. But I believe they're all a function of price anyway, in one way or another. Like they sort of triangulate around one another, but they're all a function of price, and price is a function of adoption. Right?
Precisely.
So, and I wonder whether or not just that very high level, superficial analysis of what's happening in the adoption landscape, whether we speed run that as a result of bringing forward White House green light for Bitcoin adoption, because we're seeing quite a lot of progress in that front in just 8 months. And so that was readying the ground for what's about to happen, I think. We haven't seen anything yet. So Bitcoin ETFs, 20 months now, tens of billions of dollars, most successful ETF launch in history. That tells me that there's a great untapped pool of capital that is ready. They just wanted it to be accessible in a way that was acceptable to them from a legal clarity point of view. And now with what we're seeing from the Trump White House, would that accelerate it then further? And what happens to your models? Like Saylor is famous for saying all your models will be destroyed.
Before creating one himself.
Well, yeah. Well, he's well,
which was interesting.
I want to get onto that, and to be fair to what he's done as well, because I know, being a very prominent person in the Bitcoin space now, that he's kind of a lightning rod for a lot of unfair criticism as well as, fair commentary too. But so we'll get into that. But I want to lay that out for you, and how do you take what I've just laid out? Do you think it's truthful? How do you think it will affect the growth of Bitcoin and the power models?
I think it's...
I know I've put a lot there on the table.
It's fine. It's fine.
Thank you to the audience for being patient with my monologue as well. But I just wanted to lay out what my understanding is, and whether you would contest that to begin with, and then how you think it might impact the model projections.
So to be honest, I would contest it, but I also want to be very, very clear that my sort of bias is not that the model succeeds, or I'm not, we talked about this a little bit pre-show. Like, this is not, if I look at something like the power curve, I'm just looking at the data, looking at the evidence, and then seeing sort of how that overlays, with the math, reality versus math, so on and so forth. The narrative is very compelling. What you said is the adoption grows, but we're also having massive adoption, like nation state adoption. It was
ahead of time.
Right. It was Bitcoin treasury cycles or Bitcoin treasury companies last cycle. Now it, could be more nation states, like very quickly, United States to be a little bit cagey about if they're doing this strategic Bitcoin reserve, how much they're going to do, so on and so forth. So I'm totally open to that. So I want to make the clear caveat that I have no objection if it goes, say, exponential or parabolic for a sustainable period of time. However, my view does remain at the moment that it is such an interesting asset that we've never seen before. And so far, again, just myself tracking this model for about 7 years, I'm sort of a not wanting to fix what's not broke. So I do think that the model actually has a good representation of how the system scales, how it grows. One simple stat, we talked about this before in our earlier chat, but basically, if you look at the transaction value, all right, not volume of stock trading, but the value in US dollar terms of the Bitcoin network today, what flows through the chain in dollar terms, if you took every single coin that flowed through, even not the unadjusted, not the adjusted balance, which is adjusted down, which some of the metrics companies like Coinmetrics or Glassnode do, but just the full value of coins that flow through every day, multiply that number by the USD price at the time, run a trailing 12-month number, it's about $7 trillion. $7 trillion in payment. That's a flow. It's not trading volume. It's just on-chain volume. $7 trillion in the last year. The Federal Reserve, the Central Bank of the United States, which again, the monetary base is basically the balance sheet of the Federal Reserve, is about 3 and some trillion in what they call bank reserves, which is basically the bank account of each central bank. That 3 trillion, let's call it 3.5 trillion, that flows through the Federal Reserve at a rate of 1.1 quadrillion a year. So $7 trillion equivalent in Bitcoin versus 1,100 trillion in the Federal Reserve. So it's an enormous network, the dollar network. And that's just the dollar, by the way. London has, I think, or the UK has what I think is called the CHIPS network. It's FedWire for the US, CHIPS, I think, in the UK, Euro, Clear, whatever. For your, the dollar is the biggest currency, but there still are the euros flowing through, pound, sterling through in their system. That's not including those, that 1.1 quadrillion. So the fiat market is still enormous. It is enormous. Again, I have no problem if we go, full, choose your adjective, Bitcoin crazy, and Bitcoin gets massive adoption. But you have to also ask the question, can that scale into it? I mean, can we, if we go full on Bitcoin standard next month or next year, can the Bitcoin system handle that? Those are the types of questions that I am more interested in tracking, not necessarily, is your narrative, which I like. I mean, I'm bullish on any bullish Bitcoin narrative, but the raw data as I look at it shows a much more throttled view.
So what's throttling it then? Because my understanding of what's happening at the moment opens up the possibility of something that's not captured in the models happening. I'm not saying it's going to, but it definitely for me, as if my assessment is correct, it opens up that possibility of happening. Now, I'm not sure what's going to happen, but nobody knows, right? Are we going to, if we surely get a parabolic run, then we do have another severe correction as well. Or do we just have this gradual climb for 8, 10, 15, 20 years like Amazon did, with quite significant drawdowns along the way? But if you have a look at the line on log chart, it's a fairly consistent run for about 20 years. And that's entirely possible. The other example that we were just discussing outside was gold's performance after the gold ETF was approved, and it went on, maybe it was an 8 or 10 year bull run. Right. And then an incredibly long...
And then sideways for 10 years.
You can call it sideways. It was very much a bear market for at least half of that time when we saw a drawdown. And
Peter Schiff hated that time.
And then we saw a gradual rise and that sort of cup and handle formation that we've now seen break out in the last 12 months or so. So that's also possible. I don't know which shape is going to happen. All I know is there are things that are lining up to open up enormous amounts of enormous pools of capital to start entering into Bitcoin that I don't think models have captured that. Mm-hmm. And it's not an insignificant possibility that that happens to invert or subvert everybody's assumptions.
Break all the models.
Yeah.
Yeah. Like I said, I really
wanted to press you on that.
No,
you can tell.
I don't have I'm not married to the model is the thing. Like I really am not. It's not the power curve itself is, and by the way, a lot of people don't like the word power law. So I always go with power curve. It's just a curve. You know, there's exponential curves and there's power curves. There's logarithmic curves. There's linear curves, which is not a curve, but it's, literally on
one of the
chart.
claims that has been made in support of the power curve /law is that it's scale invariant, therefore will continue. Yeah. Will continue.
So
to
the scale
hold.
invariance is that proportionality I was just talking about. So the actual definition of the scale invariance, like the number I can give you is 12.7% increase in time. So it doesn't matter where you pick on the curve, on that curve, which is not a straight line on log scale, but it is a straight line on log. You can pick any point, take that value. Right now it's 109K roughly. Go back 12.7% in time or go forward 12.7 in time and the price will either be half or double where you are. That's the scale invariance. Is that clear? Just that definition? So that is the scale invariance of Bitcoin. And so I think it's a nice story. Also the word, again, not to come back to this idea, but the word that I like about this model is it's sustainable. And you really can see it in the chart. Like, exponential curves are just not sustainable over a true long period of time. Like the system breaks or, like Jeffrey West says, you have to jump to a faster treadmill. And I buy that narrative of scaling. It's kind of like, just so you know my thesis, like it's taking pieces of, Jeffrey West's work or, other people in the space, Sina, Giovanni, like these, a lot of good people doing, and my own research as well, and just trying to apply Bitcoin to it. But if it breaks, or if we go exponential in Bitcoin, I'm not going to be disappointed. By the way, we should talk about this, unless you want to. Yeah. So here's another thing. My sort of as I concluded my presentation today, and this is my own personal view as well. This idea of Bitcoin growing in power, all right, which is a picture of just a sustainable, sort of gradually slow, decreasing slope of the curve, like less strong every year, basically a little bit slower growth every year. A sustainable Bitcoin curve versus straight line on log scale exponential curves for everything else: gold, silver, stocks, bonds, doesn't matter, GDP, debt. The debt of the United States also. It just put it on anything. Debt of Europe, Australia, wherever. They cannot continue indefinitely. You can't have Bitcoin growing in power as well as TradFi growing exponentially. Why?
Can I challenge that? Can I challenge that?
Sure. Do you want to hear why, though, maybe before you challenge?
Let's do that.
So the reason why, this is my opinion, the reason that all of TradFi economics grows exponentially is basically comes down to compound interest. Okay, so it's the way that the banking system works. It's the credit system. Most people, even if you don't sort of know all the math, you intuitively kind of understand there's more and more interest every year, and assets are growing, but they're not like exploding. So there's an issue there. But anyway, that creates this compounding effect. It comes down to compound interest. If Bitcoin is growing at sort of a sustainable, slower and slower growth rate every year, but in mind, people listening, it's extremely fast right now, 42% per year. No asset can do that on a curve. Stock market is 11% without dividends, add 2% with dividends, maybe 13% a year. The Norwegian Central Bank, I did in my presentation, they grew at 20% from 1991 to 2008 with their oil fund. That was one of the best performing central banks ever. Now they're even slower. So they actually had to back off. That kind of bucked the ever increasing trend. But anyway, I'm getting sidetracked. The point is, if you have interest, ever increasing amounts of fiat interest on these exponential curves, but a limited, in fact, a fixed amount of sats on the Bitcoin power curve that grows sustainably, how do you square that? And so what I would say is either TradFi needs to be pulled into this power curve like Bitcoin, in which case compound growth, i.e. the interest rate, is impossible to calculate. You need a straight line on log scale to do interest. If it goes like this, you have to have some weird declining interest rate. It wouldn't and would people want to accept this weird decline? You wouldn't have just a simple, your interest rate's 5% for 30 years fixed or whatever, even if it's variable, whatever, it doesn't matter. So you can't do that. So that would be Bitcoin pulling, and people talk about this, like maybe we go to an equity-based Bitcoin system. Maybe we don't have debt in the new system. I honestly don't know. I'm not saying that I know, but mathematically, Bitcoin would pull that straight line into a power curve. That's one option. Or the other option is Bitcoin's power curve goes exponential. It matches the growth rates of every other asset in the system. If that happens, I would contend that's a less desirable. That's not exactly the Bitcoin. It's not the sort of the Bitcoin ethos because Bitcoin will do well in both scenarios, by the way. I'm not saying one or, I'm not saying Bitcoin can't do that, can't do well. But it does assume compounding interest. And how do you compound fiat interest on top of limited Satoshis? That's my query that I left the presentation open.
Unless I've misunderstood what you've just laid out, there's two things. Obviously, there's a limited scope for you to outgrow the system when you're inside the system, right?
Mm.
So there's only so long you can, if you're in the S&P 500, there's only so long you can outgrow the S&P 500 before you become the S&P 500, right, as a stock. But Bitcoin is essentially what I consider it it's outside the system, and it's almost a sponge for the profligacy of the system. Yep. And so a reflection of that. And so it can grow as fast as the fiat system can be profligate and badly administered. And what we've seen is that when countries develop a certain debt to GDP level, that they don't get out of that without a currency failure, currency reset, currency debasement. And so if we're going to see an acceleration of that, I guess it ties in more with my initial sort of hypothesis about accelerated adoption. Mm. And so why can't it just be a mirror of how bad the regular system is and just continue or perhaps even accelerate growing for as long as that can be bad? And so I don't see that any functional state will ever forego its ability to print its own currency.
Right.
And we've seen, if you just look around the world, you can look outside the G20 even, those nations still have the ability to assert control over the currency that's used within their borders, right? And some of them are almost borderline dysfunctional states, but they still have that ability to assert that right. So I don't think any of the G20 are going to lose that right anytime soon, not within our lifetimes. But what we will have is the option to opt out and say, you print away.
Right.
My wealth is stored in Bitcoin. And so Bitcoin can continue growing and perhaps may even accelerate growing as long as that is bad, because we're measuring what's the denominator, right? So
yeah, but that is my second scenario. I agree.
Okay.
That is Bitcoin.
So are we agreeing or disagreeing? Have I misunderstood you?
Yeah, no. There's just two scenarios that I see. That is the idea that Bitcoin is on this sustainable sort of power growth of adoption. Judging by the price, you can see it. For every 12.7% increase in the life of Bitcoin, the curve doubles. But that gives you on log linear, it gives you sort of a nice sustainable curve, which I've talked about a lot. But if it's going to do, like you said, mirror the system, be the escape hatch, the monopolies won't be given up, which by the way, I think is totally possible. Then Bitcoin will move exponential, and it will grow with the rest of the system, which always grows exponential because it has to, because of the compounding interest. So you have to get through the thought process I'm doing here. You have to first of all admit that Bitcoin is growing in power, and it has been for the last 9 years. It's been growing since the beginning, but the power growth was actually faster before 2016. From 2016, it's an unbelievable consistency. Like you could take the pricing data from 2010 until 2016, stop calculating, run the regression, calculate out, add that 12.7% increase in the life of Bitcoin, see where the curve doubles. It's almost identical to the data that would go from 2010 to 2016 all the way till today. It's an unbelievable fit. It's like it blows out any other, again, model.
I don't question that.
No. But I don't say that. I don't say that to try to say, like, again, I'm not married to the idea itself. But I do like the elegancy of a power curve. Just like cities grow sustainably, Bitcoin could grow sustainably. But yeah, I would say that if your vision played out, or your scenario that you laid out played out, where we do have, parabolic growth, use the word you want to call it, but some parabolic growth, short-term super exponential growth, where all the central banks in the world are racing to buy Bitcoin. Everybody knows that that's the only way to protect your purchasing power, but they still want to issue their own currencies. Then, and they won't, again, I'm talking decades here. I'm not talking, but if that, after decades, still people want to kind of trade around whatever, USDT or even a stable coin equivalent of, the sterling, then, and you still have normal debt denominated in compound interest rate, 3% per year fixed over 10, 15, 20, 30 years, then yes, Bitcoin's growth would start to mirror the growth of the system, which would be exponential. So you would move back to the straight line. That's the latter scenario. I do think the more elegant would be the former, but in the former, it's also a very confusing thing because TradFi has never been power. It's always been exponential. It's always been based on compound growth rate of the credit market. So,
do you think it's fair to say that TradFi has been a reflection, its totality has been a reflection of the underlying economy?
Yeah.
And as a result, reflects the growth rate of the underlying economy, whereas Bitcoin is still just a tiny fraction of the total.
Yeah. And by the way, I didn't make that point. So I still believe personally, I said this in my presentation as well today, like what you see right now with the curve of Bitcoin, the price action, 95% of it has to do with the adoption itself of the system, of the network. Bitcoin's not thinking about, how many bank reserves the Fed has printed today or tomorrow. And anyway, like I said, it's way smaller. It's 1.1 quadrillion trailing 12-month dollars versus 7 trillion in Bitcoin equivalent USD value. Very small. And Bitcoin is growing like gangbusters. It's growing on this curve, which is, by the way, super fast. It's just the speed of that will decrease over time. So it's a big system. It's a big topic. I think a lot of people haven't quite grasped their heads around it. What this idea means, like power growth versus exponential growth. But to me, I think it's fascinating.
For what it's worth, I agree that the odds are that it's going to continue along the scenario that you've laid out. What I'm thinking about, and the reason why I'm sort of playing devil's advocate here about the possibility for those models to break, is that, for the longest time, we've had more than 100 years of sort of data on fiat. And Bitcoin comes along and breaks that paradigm, or at least opens up the possibility to break that paradigm. And a lot of people have been slow. I wouldn't even say a lot of people. Everybody has been slow to recognize that, except for the early cypherpunks. Because, it's only, 15, 16 years old now.
Yep.
And I was certainly late to it, even though my awareness of it was in 2011 and 13. I found old posts of mine on various forums. But it took me much longer to actually buy and adopt Bitcoin and then understand its use case. So I wonder whether or not, as Bitcoiners, we might be making the same mistake about Bitcoin, that we've got these 16 years of data.
Yeah.
And it holds. It's a beautiful model. And it's robust in logic, mathematics, reasoning, and it's a beautiful thing to look at too, right? But I wonder whether or not, the sand beneath our feet has been shifting gradually, and we just aren't opening ourselves up to the possibility of something else happening to break that model. Just like Bitcoin's arrival has opened up the possibility to break fiat's monopoly. And I wonder whether or not we're about to see accelerated adoption. Not in a short term. I don't mean it's suddenly going to happen within 18 months to 3 years even. But I wonder whether or not the growth rate over the next 10 or 15 years is at a much higher level than perhaps the models predict because of those changes that I was saying. Otherwise, like everything you've laid out, totally understand it. Like it makes sense. The math is there. It's the evidence and the data is incontrovertible, right? It's there. It's whether I'm just opening up myself to the possibility of that changing and looking for signs and clues about the catalysts that might drive that change. And I'm seeing them there. I'm just not sure it's going to play out the way I'm anticipating. I'm not sure of that at all.
Yeah. Well, no one can know the future. So, there's
not even the power law.
Many phrases about models, right, predicting the future. But that one more stat, just
sure.
So we had the 10% number, which again, Bitcoin grows at 42% per year at the moment on a curve. Only will fall to 10% by 2070. That's one number, but I think that's very conservative. Of like, again, I don't know what it means when obviously this is pricing things in the USD, which is the dominant reserve currency at the time. Will Bitcoin go faster to SAT standard, global reserve standard? Probably. But another metric that I track a lot, which again is the growth of the monetary base plus gold plus silver. All right, so this is what I call the global TradFi base money. It's about 45 trillion at the moment, USD equivalent. That's all gold, silver in the world plus central bank money. That grows at something like, again, a doubling every 10 years, 7% per year, something like that. And if you track that out versus the power law or the power curve of Bitcoin's market cap, they will meet in about 2043 at about $150 trillion equivalent. Again, am I saying May 2043, which I think is the month? Is that going to be exact? No. Am I saying that we go on a SAT standard on that month? No. If anything, I think those are interesting benchmarks of where the growth, it's not growth to be scoffed at. I mean, even because the only thing people don't like about the power law or the power curve intuitively, the power function, is that it's this declining growth rate. It's not as bombastic as exponential, but it's still incredibly fast. So at 42% per year and slowly declining, you would still hit at least the projected value of fiat, gold, and silver altogether in totality by 2043. And another interesting metric, Bitcoin is about to pass the dollar, all the physical Benjamins, cash money in the world, not in totality, but one by one. So Bitcoin has passed every physical currency stock. There's about $9 trillion in physical cash in the world, physical, Benjamins, yen, euro, coins and notes, physical cash, about $9 trillion. Bitcoin, obviously $2.3 trillion market cap. The only currency, actually, the old word for currency used to be the physical. Now it can just mean like anything, like yen, dollar, but that's the old, like if you look at textbooks. The only currency left to pass in this domain is the dollar. It's about 2.4 trillion. And any month, Bitcoin could pass it. So it's another little benchmark. I'm kind of a train spotter with these random.
That's quite an incredible milestone, actually. Yeah. One more question about the power curve, and then I want to talk about money supply and business cycles as well.
Sure.
So with the power curve, my understanding is that it remains intact if Bitcoin comes back down to the power curve price in a bear market. So it's got plenty of room to the upside, provided after the cycle high, if there is indeed a cycle, or at some point in the future, it continues coming back down and adhering to the lower limit of the power curve. Is that right? Have I got that right?
Actually, the curve slices right through it. So if you again, log is sort of the thing you cannot unsee with Bitcoin. But if you imagine log, where basically time and value is a little bit expanded at the beginning of the chart, but then it really compresses at the end of the chart in the higher levels.
Yep. You
draw a straight line. The Bitcoin price is just like moving around it like a snake.
Oh, I see. You're going. I'm going with the upper bound and lower. There's a lower bound.
So the curve slices right through, and literally we are right at a crossing point right now, which is pretty rare actually to be right on it. And we've had a slow churn up, and there's a lot of people talking. It was Wall Street, ETFs, treasury companies, whatever. But and again, I expect this to happen unless it breaks. Again, never financial advice. I'm not a trader or whatever, but we've had these blow off tops every 4 years. We're coming into the fourth year. We'll see. But right now we are right on trend, literally on trend. The trend is 109K. The price is roughly 115K. I think if people want to get excited or think about prices, my simple analysis of this is you look at them in different bands of how the percentiles of where Bitcoin sits as a multiple over or under trend. You'd be at mid 90s, i.e. extremely rare. 95% of the observations would be below this when Bitcoin gets to 3x the trend. The trend will be 125K by the end of the year. 3x 125K, 375K. That's my view of like a pretty unsustainable top. My view. Could be wrong. And again, it's also based on a fairly simple premise of a year and a half, 2 years after the halving, Bitcoin goes gangbusters. Then we have the bear. And we pull back. People get flushed out. All the broken promises, empty promises get flushed out. And we start again. So the power curve it actually has beautifully sliced through the action, bull and bear. It's right in the middle.
So everybody's asking, is the Bitcoin cycle, I should rephrase that, are the Bitcoin cycles over? So going by what you've just said, you still expect quite a rapid appreciation over the next 6-8 months, perhaps, and then a continuation of the bull bear cycle. So presumably,
never financial advice. Again, I'm not a trader. I'm not into it. Like I like to track it as a. I do a lot of, I stream it almost every day now. People that watch, they see the bands and stuff. But I am not saying it will definitely happen. I just find comfort in that model. Kind of keeps me sane with all the. I think it's a high signal idea. Anyway.
And your potential target is 375.
I would say that is a extremely rare air territory based on the curve itself. If the curve at the end of the year is going to be 125K, extremely rare air would be 3x. For historical purposes, by the way, the max is 7.8x. That happened twice. It happened in 2011 and 2013. I think never again are we going 7.8x. The trend could be wrong, but that would be a 100th percentile event. It would be 100% of the observations have been 7.8x. What's the precise number
if that happened? What would be the precise
7.8x times 125. So you're at like
800 and something, right?
Yeah. Close to a mil, basically.
Yep. Okay.
Possible.
Yeah. Wow, that would be an incredible run. I haven't experienced a parabolic run like that because in 2017 I wasn't into it, and it was around about the 4, 5, maybe 6K mark that a friend of mine said, "Hey, have you seen Bitcoin?" I'm like, "Oh, is that still around?"
Yeah.
And didn't think anything of it. A few weeks later, might have been some consolidation. A few weeks later, it's nearly 10,000. What the hell is going on? And ignored it. And I just thought, that's too risky. It was 1,000 in the last cycle peak, 10,000. Forget about it. Not even a couple of weeks later, maybe 2-3 weeks. 20,000. I'm like, this is outrageous. And that was when I committed. I said, if it doesn't die in the next bear market, I'm going to buy in the next bull market. And
my favorite meme is every Bitcoiner gets the price that they deserve. I think that's a great meme.
I agree with that.
True.
Yep. And it's precisely why I don't have any sort of envy or jealousy about people who bought earlier. I feel like they deserve it. Especially like having lived through a bear market and held strong. I know what it takes now. And if you've done that for 2, 3, 4, or since the start, 2, 3 cycles, man, you've earned that. You deserve it for the discipline, for the conviction of hodling all the way through that. I don't think anyone can begrudge you. You can't just say you were lucky.
No.
Because it takes a lot of fortitude to do that.
It does take fortitude. But I would still say we're incredibly fortunate that we have this opportunity, this escape hatch, to use your lingo. So, it's all good either way. At the end of the day,
So there was a lot of conjecture in the last cycle about what's driving the Bitcoin price.
Yeah.
And I think it's kind of diminished now, but there was a strong consensus around last cycle, around 2020, 21, that it was the Bitcoin halvings that were driving the Bitcoin's price cycle, the bull and bear. And that I guess once the peak of the bull market hit, we started seeing different analysis that was mapped to the money supply. And it was the first time I'd seen that discussed in Bitcoin, that actually it wasn't the halvings driving the price. It was the money supply. Well, at least it mapped really accurately to the Bitcoin price cycles in a way that I guess we had the first inkling that the halvings were not perfectly mapped to the Bitcoin price cycles was how much later and later the bull markets became.
Yeah.
And so later or earlier? This time around it was later because we're quite a while. But I think last time we were a bit early, weren't we?
We were.
Yeah. So like how did you ever buy into that? Because famously that was the theory behind the stock to flow model.
Right.
And I'm not sure if Plan B still supports that and holds that view. But we've seen a lot more openness in the Bitcoin space about other things driving the price, in particular money supply and business cycle, both of which seem to be concurrently on the upswing. How do you see that?
Good question. I've actually tracked both since 2018. So I started the power curve research in 2018. You can find it on Twitter. It's like the last day of the year, December 2018. And mid-2018, I was posting about how Bitcoin represents base money. I'm going to start tracking the base money supply. I've had more courage, or not courage, but I guess
conviction.
Yeah, conviction is a better word. That it's the former. It's the power curve that drives most of the growth now. It kind of goes back to your earlier question about, is it other things, economics, monopoly, central banks, debt. I actually think still, and another simple metric is that 1.1 quadrillion versus 7 trillion Bitcoin. I think 95% of what has happening with Bitcoin still to this day is the power curve. It's the natural adoption of Bitcoin represented by the price, the natural adoption represented by the price. And that's the best chart that can do it. But of course you can see it, like you said, in the hash rate addresses.
Does the power curve project the tops and the bottoms for timing as well? Or just the levels of the tops and the bottoms?
Some people have tried to do that, but in it itself, it does not do that. That seems to be a function of the halvings. It seems to be. But some people try to model the halvings around and the price tops and everything. But just simply the curve, simply the way that the adoption of Bitcoin has gone, for every 12.7% increase in the life of Bitcoin, the curve doubles. My view, still to this day, it's evidenced by something like $1.1 quadrillion in bank reserves flowing through the system a year, velocity versus 7 trillion of Bitcoin on chain. My view is we're 95% just growing. We're just growing as we are. 5% economics, money supply, debt, whatever. That will change over time. And like I said, I think we'll get to 50-50 by the year 2043. That's how I view it.
So within the lower bound and upper bound of what I've seen of the power curve, there are oscillations, right? Up and down. On a continuous upward trajectory, but there are oscillations. What do you think drives those perturbations? That's what I'm getting at. It's like, what's driving that? Do you think the halving still plays a part in that?
Yeah, I think that the halving is a natural instigator of the 4-year cycle. There's interest there. There's confusion there. There's
so you
new
think
people
it's more
learning.
A cultural thing than a supply-demand element? Because the supply part is it's so minuscule.
Right.
Do you think it plays a large cultural factor in determining?
Not the only.
Okay.
I think, it's the madness of crowds, it's markets, everything else. But one has to ask, why is it every 4 years? And that could break. Everybody's talking about it. Like all the Bitcoin treasury company CEOs are talking about it. This is not, we're going to be on a sustainable growth path here. No more bears, this and that. Everybody's talking about it. I myself am not convinced. I'm looking at the numbers. Again, I have the luxury of just sort of, we all have the luxury of Bitcoiners being able to watch this stuff, try to figure it out, but also, let the data tell us what's happening. I haven't seen anything to say that this is like, we're now on a new sustainable path. And by the way, what is the path? Is it exponential? Is it linear? Is it going to be a power growth? What is your sustainable path? So to me, the 4-year periods, the 4-year cycles, that idea has not been broken. If it breaks this year, like we, go to some extended upper leg and we sort of stay there, then I would say we need to revisit the idea. But for now.
Yeah. I'd have to go back and have a look exactly which type of money supply and business cycle amalgam that this indicator was looking at. But that tracked more accurately the bottoms and the runs than anything
There's a lot
relating
of
to,
these, like, I'm not a believer in this, by the way. So there's a lot of these M2 US money supply, lagging indicators.
Oh, no, that's not what I'm talking about.
Okay.
That's not what I say. I've seen that, and I've read the criticisms of it from, my good friend TXMC and other analysts as well. And look, I don't dispute any of that. I'm talking more, like the 15-year cycle of what's been happening with money debasement, or monetary debasement, I should say. M2, money supply, business cycles. Tech Dev is an analyst who has done that quite consistently since I've been following, about 3.5 years. And it's I don't know if you know him or you follow him at all, but it's eerily accurate, much more accurate than anything else I've seen relating to on-chain metrics or the halving or anything else. And it matches the peaks and the troughs. At least it marks off where the bull market, the meat of the bull market kicks off.
Right.
Every single time from the earliest days. And we're like, well, maybe it was a money supply all along. And it was only just when the price action slightly misaligned with the halving cycle that we started maybe being open ourselves up to that possibility.
Yeah. I have a chart on this. So again, the monetary base right now is about 26 trillion. It was as high as 30 trillion post-COVID, during the peak of COVID, 30 trillion. Before COVID, it was 20 trillion. So 20 to 30 down to 26. Mind, Bitcoin also, and by the way, when Bitcoin started, the global monetary base was maybe 7 trillion. Okay, 6-7 trillion. So Bitcoin is in a whole, it is true to say that Bitcoin being born out of the financial crisis and stuff, that is a new financial epoch. The sort of the interest on reserves and the idea of just flooding the economy with reserves when anything goes bad. Yes, they did that to an extent here and there always, but it just went haywire in 2008. So, broad monetary epochs, United States was like silver gold standard, 1800s. It was actually it was bimetallism, which was unfortunate that the founders did that because you get Gresham's law, bad money drives out good. But it was focused on silver at the start of the Republic of the US, eventually by 1900 went fully gold, and then just completely broke anyway 14 years later, Federal Reserve. So you had that that was the end, the ultimate peak of the gold standard. The international gold standard was very short. It was like 1870 to 1914 when central banks worldwide agreed on gold. In the modern era, yes, gold is a 6,000-year-old sovereign sort of coinage and stuff like that. But so we had that epoch. Then the Federal Reserve is a famous one. I think that is a good epoch, basically from the Federal Reserve through the dollar exchange standard, through post-World War II. Central banks around the world reserving dollars instead of gold, so on and so forth. Until 1971, de Gaulle recalls the gold, wants it back, devalued the dollar fully, still $42 an ounce on the US's books, but that's statutorily. We have a market rate of, actually going back gangbusters now, 3,300 or 400 per ounce. And then 2028, again, a new monetary epoch. So Bitcoin it is true that Bitcoin is in this monetary epoch itself, which is like started in 2008. But my view still remains about that 95% power curve of network adoption. Because, and this is a topic that Bitcoiners get wrong all the time. They're just not looking at the balance sheet or whatever. The Federal Reserve, as an example, was decreasing the money supply from 2014 to 2019, decreasing. In fact, and when I say it was it means the balance sheet did not grow. That's literally the printing press, the balance sheet, the monetary base. It topped out in mid-2014 and then went sideways to down until 2019. There was a big spike in the repo market, September 2019. It basically just meant all of a sudden people looked around and they needed more reserves than they had. Repo market rate spiked, and it was a sort of a mini crisis, whatever, and they started to print again. So actually, we had an unhealthy increase of the money supply just before COVID, but then COVID just destroyed it all again. The point is, let's just use the 2014 example. From 2014 to 2019, the Federal Reserve itself, money supply was going sideways to down. Bitcoin's price boomed during that period. It went through it did go through a sort of a crypto winter, as they called it, but then it boomed in 2017, then went down again. Right as the money supply was starting to pump up, Bitcoin was going down in 2019. Bitcoin went down in 2020. Money supplies were rocketing up in 2020. So I don't see the correlation yet of the money supply.
Okay.
my answer. I still think 95% power curve.
Anything else you want to leave us with before we go?
No, that's it. I mean, Archie, it's nice meeting you. Great talking. Welcome to Riga again. At One Base Money, you can find me on all platforms and my website as well. At
Likewise.
onebasemoney.com.
It's been a pleasure, man. Thanks.
Appreciate it.